Hey everyone, Couch Investor here with another video for you today. In today's video I'm going to cover everything you need to know about Lemonade, the new IPO. Most of you have asked questions in my community tab, so I will answer I think most of them, so stay tuned for that. Before I get into the video, if you haven't subscribed yet, maybe now's the time to hit that subscribe button. And if you like these videos, please leave it a thumbs up as it really helps me out grow the channel. So without further ado, let's dive into this. Alright, so first thing you need to know is that the insurance industry is huge. Property, casualty and life insurance accounts for $5 trillion globally and is about 11% of the GDP of the United States. So what's the big difference between Lemonade and a legacy insurance such as Geico or State Farm and many more? Those companies have been around for over 100 years and are generating revenues for over $100 billion every year. So first of all, Lemonade is built on technology, AI, data. As we can see here in the video, you can apply for insurance for Lemonade in 90 seconds. You talk to an AI that's called Maya. She will ask you a couple of questions, you will answer, and then she will calculate a policy for you. Even if you want to make claims, there's another AI called AI Jim. You talk to him. Usually the claims are resolved in a matter of minutes. If the AI cannot solve your issue, then a real human will answer your claims. As of now, over a quarter of the support tickets are answered by the AI, meaning no time is lost and less cost for the company because an AI answers the questions and not a real human that they have to hire and train, etc. Another big difference between Lemonade and other insurance companies is that Lemonade takes a flat fee of 25%, whereas other insurance companies will most likely earn their revenue by rejecting claims, and that way more money stays on their side. Lemonade has no conflict of interest by rejecting your claims, so they earn more money. The unclaimed money at the end of the year will go to a charity that you have chosen at the beginning of your policy, so Lemonade will gladly give you back money if the claim is correct, and you as a person will have less of an urge to try and fool the system, because the more you fool the system, the less money will go to the charity that you have chosen or the charity that you actually volunteer every weekend. So first question was, what's their moat besides first mover, asked by Felix. So besides first mover, I think data and AI is a huge competitive advantage that they can keep for the next couple of years. Same thing happened with Tesla. A lot of people have said, oh, Tesla makes EV vehicles, other companies will probably make the same, and then Tesla will probably lose out on the market share. We all know that is incorrect, so that's my point here as well. As we can see, the AI handles more than a quarter of customers' inquiries. Lemonade collects actually 100 times more data from a customer than any other legacy insurer. Daniel Schreiber, actually the co-founder and CEO of the company, compares it to the health industry, whereas before you went to take a blood test, you marked a couple of things on a paper, and then you get your results based on a couple of markers, and that will put you in a pool of millions of people. So here N equals millions of people. But nowadays with precision medicine, for example, like we've talked on this channel, Invitae or Illumina, you get N equals 1. You don't have a constraint of just 20 markers, you get millions of markers for one person. So if that one person deviates from another person, but all the other things are the same, they are not put in the same pool, whereas before, everyone that had, let's say, 99% of the same markers as the other will be put in the same pool. So same thing with Lemonade. By the time the other dinosaurs try to create the same thing, Lemonade will probably be still ahead. The fact that 70% of their customers are under the age of 35 means they're attracting the younger generations and a generation that is early in their life cycle. But we're going to talk about the life cycle a bit later, because that's one of the ways their portfolio of Lemonade will actually grow. At the time of making this video, there's only pet insurance, renters and homeowners. I would like them to go a bit further with life insurance, car insurance, etc. But we're going to talk about that a bit later. So alright, so next question are, what are the entry barriers for Lemonade? I suppose it's AI and machine learning, but why couldn't other big companies do any better? Right, so first of all, not only AI and machine learning, so the fact that most of the clients for other legacy insurance company have a certain age, and those types of people will be unlikely clients of Lemonade because, well, the use of a smartphone, AI technology and all of that does not suit that category. And that is why we've seen that 70% of Lemonade's clients are on average 35 years old. Actually, there's a study that has been conducted, and it has been seen that usually an insurance company gets maybe 1% of their traffic from social media, whereas Lemonade gets over 17% of their traffic on their website via social media. But let me go back to the point of why can't other company do any better than Lemonade. Well, I will give you an example of a company called Amazon. Back in the day, Amazon started as an online bookstore. Their whole thing was, we're going to go online and put everything online. Back in the day, Walmart saw Amazon what they wanted to do, and what did they say? They said, oh, let's see how this thing pans out. If they do well, we will buy them, or we will try and do the same thing. Well, fast forward a couple of years, I don't have to tell you what actually happened. Walmart didn't do anything, and Amazon is one of the biggest companies in the world right now. Now, what I want to point out here is that when you build a company based on technology, it's way easier to grow and adapt. When you start your company with zero technology and then you want to make a 360-degree turn and put some technology aspect or turn your whole company into a technology company, that's way, way harder and almost impossible to do. Right, so next up is more of my own opinion. Where do I see the stock in the next 10 years? Could it be a 10x? And what are the good entry points? Thoughts on market share relative to other legacy insurance company. Right, so first of all, I don't buy stocks for the short term. I buy Lemonade especially for the very, very long term. As we've seen before, insurance companies are over 100 years old with revenue of over $100 billion. So it will probably take a lot of time for Lemonade to grow to that certain level, and I have time actually on my hands, so that investment will probably be for the next 10 years. And for the next 10 years, I think the company should grow 5 to 10 times what there are today. And like I said before, in the United States, 12 of the Fortune 100 companies are insurance companies that are over 100 years old and generate revenues of over $100 billion every year. But none of them have a greater market share than 4%. But I still think Lemonade, because it's an innovative and disruptive company based on technology, I think Lemonade in the next 10 to 15 years will have a greater market share than all of those legacy companies. Alright, so next up we're talking about the short-term growth of the company in the next 3 to 5 years. Alright, so I would expect hyper growth in the next 5 years. That being said, I would like Lemonade to be available all over the US and maybe expand in the EU a bit more, which is actually the plan for Lemonade, as we can see here. But the only struggle will be regulations, as every country and I think every state as well has its own sets of regulatory compliance. But I still believe that Lemonade should be available in the next couple of years in all the states and probably expand in the EU a bit more. In the UK, for example, maybe the Nordics, Spain and France would be awesome. Obviously Belgium as well. But I would like to see their portfolio grow. As we can see here, they started with homeowners and renters. Now they've added pets, but I would like them to add car and life insurance in the next 3 to 5 years, so they grow their portfolio more and more. Travel insurance could be done as well, as it's something that will probably vary from time to time, but I think it's something that they've put on hold until this whole outbreak situation is resolved. What's interesting to see on the picture is that Lemonade actually knows where they want to go. So you can see here someone that's 25 years old takes an insurance for a renter's policy, then moves in with his girlfriend, wife, whatever, pet, moves into a condo, becomes a homeowner, then pet insurance, car insurance, life insurance. Obviously travel insurance may vary from time to time, but at the end, when they are reaching 50 years old, they have this umbrella that covers most of the things an insurance company should have in their portfolio, which is good to see. Another important aspect is something they called graduates. So graduates meaning customers that upgrade their policy from Lemonade renter's policy to a Lemonade condo or homeowner policy, as we just saw in the picture. Why is it so important? Well, the average renter pays nearly $150 per year, and that jumps to around $900 for owners of homes and condos. As of now, almost 10% of condo policies at Lemonade are actually graduates, so meaning they started with Lemonade as renters and continued to a condo policy. Right, so next question is a bit more speculative. It's regarding profitability. When are they expected to be profitable? Well, in my opinion, they won't be profitable in the next couple of years. As their CFO, Tim Bixby, actually said, they are not profitable by design because everything they earn, they are reinvesting in the company to grow faster and grow bigger in the next couple of years. And that's with every new disruptive and innovative company that comes into the market. Tesla at the beginning was not profitable at all. Square was not profitable at all. And they grow and grow and grow. At the end, they will become profitable. And when they become profitable, that profit grows very, very fast. He continues on saying, pointing to Lemonade's improving cash flow and operating margins in recent years, I would expect Lemonade to be profitable in the medium term. But we can see a positive evolution in the company's financial. We can see here that gross loss ratio actually declined steadily from 161% in 2017 to 113% in 2018 to 79% in 2019 and to 72% for the first 3 months ending March 31st, 2020, meaning they pay $72 in claims for every $100 collected in premium. That means that up until last year, they were actually paying more than what they have received, which is something that is crazy, but at least now we've seen that the gross loss ratio is being reduced every year by a lot, and I would expect it to go even lower this year. All right, so last point is about pet insurance. I think this is one of the most exciting things that has happened recently. So what is the size of pet insurance? How many people actually have pet insurance, etc.? I don't know exactly how many people have pet insurance, but we can have an estimate of how big the market for pet insurance is. As we can see right here, the pet insurance market will probably reach $11.25 billion by 2026. Actually, 70% of Lemonade's customers with a homeowners or renters policy are also pet owners, and yet between 1 and 2% of pet owners in the United States have pet insurance. So not a lot of people have pet insurance in the United States, but according to Fortune, Americans spend up to $75 billion on their pets every year. So again, we can see here that 2 years ago, the global pet insurance market was $6.05 billion in 2018. North America pet insurance market was $1.42 billion, but the global market for pet insurance is expected to double in the next couple of years. So I would expect North America's pet insurance market to double as well. And as we've just seen, only 1 to 2% of pet owners in the United States own pet insurance, maybe because they find it too expensive, they don't know about it, they think they don't need it, etc. But I think with something like Lemonade, where you can, again, apply for pet insurance on the app in a couple of seconds, I think more and more people will be having pet insurance in the next couple of years, because why not? Paying maybe $8 or $12, depending again on which pet you have. Do you have a cat? Do you have a dog? Where do you live? How old is it? Etc. I hope this answered most of your questions about Lemonade. I will keep following the company in the next couple of weeks and months and keep doing videos about it if anything changes, maybe opening to new countries, new policies being added, etc. So stay tuned for that. I opened a position actually in Lemonade at $80. I have buy orders at 70 and 60 and one at 55 if that ever happens. So I don't really care about volatility in the short term. I actually hope that my buy orders at 55 and 60 get hit. So that would mean I will have a bigger position and I would have an entry point that is cheaper than my $80 right now. But like I said, I'm in it for the long term. I don't really care what will happen in the next 6 months or in the next year. I will be looking at it in the next 5 to 10 to 15 years. And that will be it for this video. If you liked it, consider leaving a thumbs up. If you have any questions, something that I've missed, leave it down in the comments below. I will probably answer that as well. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.